The traditional landscape of financial system that can be described as divided into three macro areas, private sector, official sector, and infrastructure, has been reshaped in the past 10 years by technology. If we just focus on the traditional activities of commercial banks, two main areas were impacted and created an entire sector: personal finance and digital lending. Digital lending companies offer alternative finance solutions to companies. They range from business loans up to 4 years to invoice trading platform. Let's focus now on invoice trading solutions. Invoice trading. What is it? Invoice trading platforms allow businesses to sell invoices in order to free up cash. Usually, platforms focus on user experience and simplicity. Benefits are, from the seller side, speed. Platforms usually respond in 48 hours time, with a price if a request is positive. Flexibility. It's usually possible to pay just for the use of the service. It's possible to just sell one invoice instead of being forced to sell all the credits in bulk. The service requires no paperwork, and all the procedure can be done in front of a computer, and a customer service are usually aligned with the high expectation of customers. This is very beneficial for the companies that are seeking ways to improve the quality of their balance sheet ratios or improve their working capital. And it's even more useful for companies where the average payment of invoices is very high, like France or Italy. From the investor side, invoices are transformed into an investment product that is really interesting for private and institutional investor in the current market condition. The returns of traditional financial products on the markets are really low, and this product is relatively easy to understand and built in a diversified way. What are the funding models? There are two major funding models behind this service. The first one is marketplace lending or peer-to-peer. The invoice that is a company uploads on the platform is purchased by a community of investors that decide to buy an invoice for a small interest. For each invoice, there's actually an auction that it's run, and the investor that pays the greatest price wins. In this model, the platform takes a moderate risk because its role is just to facilitate the matchmaking between demand and offer. The second one is direct lending. The invoice can be purchased by the platform, and the platform funds itself by later securitizing the credits in an ABS structure that is sold to institutional investor. The platform can just loan the money to the company that repays the loan. The platform really considers the invoice as collateral. Price can be set by both platform or marketplace. In the first funding model, the investors select each loan they want to finance. In the second one, the investors set the eligible criteria at the beginning of the securitization program. So the platform sells automatically the loans to the SVP. What are the major players and the sector outlook? Startups on this vertical are relatively recent, especially in continental Europe, but they are growing at a very good path, even in continental Europe. According to research on alternative finance done by Cambridge University, continental Europe numbers have grown up to 252 million in 2016, increasing 4 times from the year before. Very different numbers from the UK market, where all the platforms dedicated to crowd investing have loaned in 2016 7.67 billion euros, with the top player, Market Invoice, lending from 2013 to the first quarter of 2017, 1.6 billion pounds. Among the pioneers, we find in USA, Bluevine, C2FO, KickPay, Fundbox. The first three are run by the marketplace model. Fundbox takes the direct lending approach. Founded between 3 or 6 years ago, has received support by important VCs like Greylock and Y Combinator. In UK, we find Market Invoices. It uses the marketplace model and is currently among the biggest players in the whole Europe. In Italy, we found Work Invoice, CashMe, Cash Invoice, Card City. Similarly to other countries, the majority are marketplace lenders. Credimi instead takes the direct lending approach. It has raised almost 20 million euros in venture capital fund money and is the leader for turnover in continental Europe. In France, we find Phoenix Cap. Growing at a great speed, it has been nominated among the fastest growing companies of the whole France. In Spain, there is Novicap. It's among the few to be present on more than a European market. It focuses on Spain, but has been recently opened also in France. It's incubated by Barclays Techstars. In Germany, finally, we find Debitos. We see more and more collaboration between these platforms and banks. Banks have in fact participated in equity rounds and have done several partnerships with these digital platforms.